Hey guys, welcome back to the channel. This is Shrish here from Trading Explained, and in today's video we are going to talk about top 10 trading habits of highly successful traders. I tweeted about it in this afternoon, but then I realized that many of you might be very new to this profession and won't completely understand what the tweet is trying to say. So I thought to make a video upon it, and in this video we'll go through each point and I'll make you understand what the point really wants to say, what those habits really are, and we'll understand the tweet in this video. So make sure to stick around with me until the end, and without any further delay, let's begin. So let's start rolling. Let's start with habit number 1, which is they are patient with winning trades and enormously impatient with losing trades. Now what does this mean? This simply means that whenever these successful traders win, they try to win it big, and whenever they lose, they try to lose it small. This is all that means. Being patient with winning trades is basically giving market the time it needs to work on the trade. Whenever the trade goes in your favor, you have to wait patiently and not cut out immediately thinking that it might reverse and give you losses. So this is the number one thing they do, right? They stick to their winning trades for long periods of time, and whenever the trade is going against them, they are enormously impatient about it. They just cut it out immediately as soon as the trade starts to go against them. So I hope this is clear. This is habit number 1. Let's now move to habit number 2. They know their entry and exit points before they enter into a trade. Now what does this mean? Successful traders usually have a system and an edge they work upon. So that system tells them where should they be entering and what should be the stop loss, which means the exit point, or the target, which again means the exit points when in profit. So before they enter, they have the system ready which tells them where they should be entering and where they should be exiting. So before they enter into any trade, they already know what kind of money they are going to make on this particular trade, or how much money they're going to lose on this particular trade. So they do not believe in randomness. They do not believe in punching random orders. They have a system, they have an edge, and they believe in that. So I hope this is clear as well. Let's now move to habit number 3. They are willing to change sides if the market tells them to do so. Now what does this mean? This means that successful traders do not let their egos come in between them and their trading. If the market tells them that they are wrong, they happily accept it and do what the market is telling them to do. Now this is very important because we all have our own biases when we start trading. When we open our trading systems in the morning, we all feel that market is going to go up or down according to our technical analysis and bias. And if we are wrong, the maturity and the responsibility to accept that we are wrong is probably the number one thing that as a trader you can do. If you are matured enough to accept you are wrong when the market is telling that you are wrong, it probably have matured as a trader. So this is what this point means. These successful traders are so mature that they accept it whenever they are wrong. They do not let their egos come in between them and their trading, and they just follow what the market is telling them to do. So I hope this is clear as well. Let's now move to 4th point now, and the 4th habit is their position size is exactly based on their risk tolerance. Now what does this mean? This means that these successful traders do not lose more than they can truly afford to lose. We see so many people in the markets, they are new to the markets, they heavily go leveraged on their positions, 10x, 20x leverage, and then they start losing their money. And when they start losing heavily because they are heavily leveraged on their positions, they start blaming the market and start calling it gamble. Now this is what usually happens to people, that they act as if they know where the market is going to go, and then they start losing money and then they start calling gamble. So this is exactly what the successful traders don't do. They do exactly opposite of it. They act as if they do not know where the market is going to go, and that is the way to go ahead in the markets. You should completely be open to everything. You can lose. You have to accept the fact that you can lose the moment you open your position, and this is what these successful people do. And because they have this thing in their mind that they can lose on this position, they do not go like crazy 10x 20x leverage on their position. They only make positions of what they can truly afford to lose. So their position sizing is exactly based on what they can afford to lose. That is the kind of risk management these people have. Let's now move to the next point, the habit number 5. They never add to a losing trade. Never, ever. Now what does this mean? This means that these successful traders do not average down on their positions. Let me give you an example. Let's talk intraday basis. Suppose you buy a stock at 100 and you keep your stop loss at 98. the stock starts to go down. 99.8, 99.5, 99. At 99, you start feeling that, okay, let me add few more stocks to this position. So my average price, which is 100, will cut down to 99.5 or something, and then I will have a greater chance of making money if the stock starts going in my favor. So this is what most people do. They start to average down on their position when the stock goes against, when the position starts to go against them. And this is probably the worst thing you can do in trading, because when you start averaging down on your position, which means you're already wrong. The market is telling you that you are wrong, because if you're wrong, you're losing money, right? So you're losing money, the stock is going against you, the market is telling you you are wrong, and then you are adding more to that position, which is like pyramiding to that position when you're wrong. So it doubles down and it ultimately kills all the traders who average down on their positions. So this is why most successful traders, almost all the successful traders do not try this. They have tried this. Each and every successful trader must have gone through these phases of averaging down and then losing heavily. So they understand out of their experience, and they do not try to repeat their mistakes. So they do not average down on their positions. What they do is they average up instead, which means if they buy at 100 and the stocks goes 102, they will add there. Although that will take their average price up a little bit, but it does not matter to them, because they know they are right. The market is telling them they are right. And now it comes back to the first point. Remember, winning big, being patient with the winning trades. So when they are winning, they are patient with the winning trades, and they give the time to work. They give the market its time to work on its trade. And when it starts going in their favor, they actually start adding up more and more. So maybe at 100, they might just buy 25% of what they can actually buy. As it goes 101, they might add 25% more of their quantities. As it goes 102, they might add more, and so on and so forth. They average out as the stock starts to go in their favor and not against them. So this is very important to understand, that you do not have to average down on your positions. Never ever do that, because market is telling you that you are wrong. And if you keep averaging down on your positions when you are wrong, you are going to lose more than you can afford to. So I hope this is clear as well. Let's now move to habit number 6. Habit number 6 is they do not try to pick tops and bottoms. Now what does this mean? Whenever we invest, this is not about trading, this is more about investing. Whenever we invest in particular stock, what we try to do is we try to catch the tops or the bottoms. Whenever we want to invest, all we want to have is we want to invest in the particular stock, and then we want the market to start moving up. If we sell out on a particular stock, like if you invested in a particular stock at 100 and sold out at 150, you want the markets to come down, because just because you exited at 150, you do not want the markets now to go to 200, because that would make you sad. But this is not how the successful traders look at markets. Even when they invest or when they trade, they do not care about tops and bottoms. All they care about is their systems, and all they see is if their system gave them the trading or investing signal today, or in this week, or in this month or so. They do not care about tops and bottoms. So I hope this is clear as well. Let's now move to habit number 7. They realized a long time ago that being uncomfortable while trading is okay. What does this mean? This means that they are okay being uncomfortable, that they are comfortable being uncomfortable now. We all are uncomfortable while we trade. When we start our positions, when we open our positions, we all have that feeling that, oh, am I going to lose money on this trade, or am I going to make money? We all have that zone of discomfort when we are trading, and all these successful traders have it too. But they are fine with it. They have accepted that they have to get comfortable being uncomfortable when they are trading. You cannot be comfortable when you are trading, because that is how the human emotions work. We all have those emotions. All we can do is minimize them, control them. We cannot eliminate our emotions, and that is why it's very important to understand to be comfortable being uncomfortable when you are trading. So this is what these successful traders do. They are okay. They are just okay. They are fine with being uncomfortable while their positions are open, and you should be too, I guess. I hope you got this point, and let's now move to habit number 8 now. They approach trade number 5 with the same mindset they did on the 4 previous losing trades. Now what does this mean? We all have a streak of winning and losing trades as we trade. But what happens is, as we start to lose more in a streak, we feel that this is not what we should be doing, or these questions start arising in our mind that, am I doing good? Am I doing right? is this the thing that I want to do, is this the strategy that I want to execute. The moment we start losing 3 to 4 trades in a row, all these questions start to come in our mind that probably I'm not doing right, probably I'm not doing the right thing. But these successful traders, that know that they have this strategy, they have this trading system, and it can go wrong 4, 5 or 6 times in a row, and they are absolutely fine with it. So they have understood that being wrong in a streak does not matter, does not make a difference. So that's why they approach trade number 5 with the same mindset. Same mindset means they have this same thinking in their mind about executing their plans and strategies practically, as they did on those 4 previous losing trades. So even if they have this losing streak, they do not care about they lost money on the last 4 previous losing trades. So all they do is they care about what next they have to execute. They focus on the upcoming trade and do not focus on what they lost or what they made in the previous trade. So even if they have a streak of winning trades, they do not care about what money they made or how much money they made, or they do not celebrate or start celebrating about, oh yeah, I got a winning streak of 5 trades or so. Similarly, they do not care about the losing trades too. If they are losing, they are fine with it because they know that they have a system and it's going to work over time. So they do not care about these losing streaks. They just keep their mindset calm and cool and approach each and every trade with the same mindset they did on their previous trades. So I hope this point is clear as well. Let's now move to habit number 9. They trade aggressively when they are trading well and modestly when they are not. What does this mean? This means that every trader knows if he's doing good in the markets or he's doing bad. And the moment these successful traders know that they are doing good, they start going aggressive into the markets. Aggressive, which means it might be that they might double on their positions, or they might start taking more trades than usual or so. It can be anything, but they start going aggressive into the market. And when they know that they are not doing good enough, they slow down, they pace their trades down, they do not go aggressive, and they understand that this is the time to rest. So this is what it means. When they're trading well enough, they're trading good, they go aggressive, and when they're not trading good, they're not bad, I can say, because they are successful traders, they do not go bad, but let's just say not good enough. So when they know that they're not trading good enough, they slow down, and they slow down on their positions, and they trade modestly. So let's now go to habit number 10. The habit number 10 is they trade the reaction and not the news. Now what does this mean? Let's say there's this stock whose quarterly results are going to come out, and the news is all around that the result is going to be positive and it's going to be good, and the news actually comes out that the result is positive and it is good, but the market of that particular stock starts dropping down. So what these successful traders do, they won't care about the result. They won't look at the result if it's positive or negative. They would look at the charts, they would look at the reaction that the news is getting. Okay, remember the point. They are willing to change sides if the market tells them to do so. So if the market tells them that I am ready to go down, I'm ready to go on the lower side, they won't hesitate shorting the markets even if the result is on the positive side, even if the result is good enough and people feel that it might shoot up the market. So they won't care about what the results are, they won't care about what the news is. All they will care about is what kind of reaction that news is getting on charts. So they won't bother about news and all these things. What they care is the reaction. What is the reaction? If the market is telling the reaction is negative, even if the news is positive, they won't hesitate shorting the markets right away. So this is the point number 10, the habit number 10. They trade the reaction and not the news. I hope you liked the video, and if you did, smash the like button and subscribe to the channel. I will see you around in the next one, and I'll keep coming back with such more content for you guys. And if you're liking, please comment down below and let me know how the video was and what more should I be covering on this channel. So I'll see you around, and you guys take care. Peace.